What up? What up? What up? Once again, this is yours truly, MJ Worthmore, LegalConArtist.com, and I want to say thank you for watching this video. 9 times out of 10, you are watching this video because you got a copy of our ebook or you got a physical copy of the book. Either way, we appreciate your purchase. Thank you so much. Hope you're finding some serious value in it. And you're watching this video right now because you decided to get the Forex Mastery mini course as a bonus. So what I wanted to do in this bonus video is actually show you one of my favorite trainings, one of my favorite things to teach on, and it's called Two Truths and a Lie. And the overarching idea is that the market makers will show you the true move first, and then show you the false move next before going into the real true move. Basically, you know by now, based on where you are in the book and based on where you are watching this video course, you know by now the market maker pattern, the market maker structure, right? The market moves in 4 phases. Market makers have a very consistent play, right? Phase number 1 is accumulation, where they are accumulating orders back and forth, kind of just there's that tightening of price where there's that very specific range where price isn't doing too much, right? Then phase 2 is called the expansion. That is the false move. And that's typically the very aggressive move that makes a lot of uneducated traders experience fear of missing out. They jump in, the hidden market execution, like these are people that are thinking that trades are breaking out, things like that. And that is a very false move. The market makers very specifically set that up so that they can whip price in the opposite direction and make their true trend, right? Now, and then of course, the last part is correction. I'm sorry, there's a part in between that, right? There's a distribution, right? That's that true trend. So there's accumulation, expansion, then there's distribution, which is the true trend of the market makers. And then the last part, of course, is correction, where the market makers will correct what they did during the distribution phase, the profit taking phase, okay? Now, here's the thing. The market makers can't do the same thing over and over and over again because it becomes easy to read. It becomes easy to kind of detect. So what they have to do is what I like to call a whipsaw pattern, right? Where basically they show you the true move first, whip it in the opposite direction to make you think that the true move is actually the wrong move. So you hop in on the wrong move thinking that the wrong move is the true move, and then they actually whip it down again back into the true move, which is why I call it Two Truths and a Lie, where they basically show you the truth, they lie to you, and then give you the truth again. And if you don't know how to actually use this pattern to your advantage, it can hurt you a lot. But if you do know how to use this pattern to your advantage, you can absolutely make a crap ton of money. I mean, it is one of my favorite patterns to trade. I love when these whipsaw patterns show up, especially because I know what's going on. So I want to dive right into this video. I want to share my screen with you very quickly, and let me show you two truths and a lie on some of our favorite pairs to trade. Okay, ready? Here we go. So this is a pair that most people love to trade, especially if they like very high speed Forex pairs. This is gold. I actually learned about gold from my virtual mentor, Swaggy C. And he told me about he traded gold and he traded a couple other pairs. And I remember looking at it and seeing it for myself. And I was like, man, this is the pair that I really want to learn. I want to learn how to master, right? So check this out. I want to show you guys this, okay? So what you're looking at right here, you are looking at the Asian range on this particular day. This is July 12th, right? Now, as we talked about in the books, the Asian range is from 8 p.m. Eastern Standard Time till about 3 a.m. Eastern Standard Time. So that's the open of the 245 candle on the 15-minute chart, okay? The purpose of this range is to basically accumulate orders, right? Accumulating orders for retail traders like you and I, okay? Now, what we also know is that the next phase, right, after accumulation, as we see here, price kind of just making that area of resistance, that area of support, this average price line right here in the middle, right? What we also know is that the very next phase of the market is expansion, right? It's the false move, okay? So I want to show you guys this. What we're most often looking for, right, is for price to break out of a box and let's say maybe shoot up and then come down, right? Like if it shoots up, that's that expansion move we're looking at. It'll make a peak formation and then it'll trend down, something like that, right? But what if the true move was actually to go up, as I'm pretty sure you already saw if you look to the right a little bit? What if the true move was up, right? When you see expansion to the high at the wrong time, it can let you know that there's a major setup happening that's meant to hurt a lot of people, but the major trend is going to be a big move, right? That's one of the reasons why I like seeing these, because if you hop in on it at the right time, Oh my God, the payouts will be crazy. Check this out. I'm gonna show you this. Okay. So if you guys see, the accumulation actually continued even through the London range, right? Because we know London is from 3 a.m. Eastern Standard, or 3:30 a.m. Eastern Standard to about 11:30 a.m. Eastern Standard Time, right? This continued to accumulate all the way into the New York session, right? Because New York opens up at 8 o'clock, 8:30, right? During that London, New York crossover. Look what happened. This range here, which is it's a very easy range to see. You got the bottom here, the top, bottom, top, right? Bottom hitting against the average price line. Look what happens. It creates this peak low formation and it expands up. Boom. A bunch of people, I can guarantee you, a bunch of people jumped in on that expansion because they said, oh, it's New York, it's breaking out, price is going to the high. All of the breakout traders said, oh my God, this thing's going to the moon. And then look what happened. Look at that very aggressive candle, right? You see what happened here. Price broke out, okay? I want you to understand what happened here. Price opened here. Price opened here rather. Price opened at this point. It expanded to the high, shot up. And people who jumped in on the buy, let's say they jumped in on the buy around like right here, look what happened. It whipped down, boom, pulled it out, pulled the floor out beneath people. So anybody who got in for a buy up here, they are trapped now. They're trapped in buy positions. They probably got their stop losses hit because their stop losses are typically underneath the range, right? So look what happens. Shoots right down, bang, knocks out stop losses, okay? Shoots down, knocks out stop losses, pulls up because here it is. People who saw this shot up and then they shot down. They thought to themselves, okay, maybe price is going for a sell. So they jumped in here for a sell position, right? So they jumped in for a sell and then price whips back up. Their stop losses are up here. So they got knocked out. Bang, just that fast. Price whipsawed, shot up, shot down, pulled back up, literally, right? Then it opens up here, okay? I want you to understand what happened. Price closed here, it opens here, it pushes up a little bit, right? Making people think, okay, maybe it is a buy. And then look what happens. Boom, shot down. Everybody in their mama, more like 99 out of 100 retail traders likely hit market execution sell during this downward candle, right? Now, here's the thing. This was the first move. The first move was a buy. Second move was a sell. Everybody who hopped in on the buy that had their stop losses underneath here, they got cooked. But here's the bad thing. They were actually right. See, this move is meant to fake out traders and it's meant to mess you up psychologically because one of the worst things about trading is jumping into a trade. I know you guys have been there, jumping into a trade, right? And seeing that your trade, the trade you got into was actually going in the right direction, but you got it at the wrong time. How many of you have ever jumped in for a buy, saw price turn against you, stop you out, and then you look at your chart again later on and see that you were right and it actually went for a buy and it went to your take profit? It happened to me so many times in the beginning, like it made me feel like I was being cheated. The truth of the matter was I was, because I didn't know the market maker setup. I also didn't know how to do an effective top-down analysis and understand what the next potential move was going to be based off of the bigger picture in the market maker cycle. Now, based off of a top-down analysis on this chart, on this trade, we could have actually seen that price was supposed to go up, right? We see this peak formation here, this peak low formation here. We could have actually seen price was supposed to go up because we saw that there was some accumulation here, shot down, and then the shot back up, right? Based off of our top-down analysis, and we can do one in another video, we would have known, hey, listen, this is the peak low formation right here. This is the V bottom. This is the first level of rise. This is an accumulation wedge, right? And what we should have been expecting was an expansion to the south to give us the buy, right? So when you saw this move and you jumped in on a buy, you jumped in too late. This is the worst time to buy because you see what happens. It whips right down, knocks everyone out, whips people around back and forth, and let's move over. Look what happens. Price goes up and up, right? Crazy. Gives you a bunch of levels of rise. Now here's the thing. Let me clear this chart off, okay? Here's the thing. We saw this whipsaw happen right here, but we should have known that we were looking for a buy. Here's how you could have known how to look for the buy, okay? So based on this day, this was the low of the day. This was where price shot up to. You could have actually used your Fibonacci retracement tool just to see exactly where price would have pulled back to, right? And as we see, classic, it pulls right back to the golden zone. So check this out. If you had set a limit order in the golden zone, like I teach all of my students to do when they see these peak formations here, if you had set a limit order, let's say at the 61.8 Fibonacci, or even at the 50th Fibonacci, and giving yourself 2 extensions for your stop loss, check this out. I want to show you just how crazy this trade was, right? Let's say you set your limit order right there, buy limit at the 61.8, and you set your stop loss here at the 88.6, okay? And what you want to do is you want to give yourself basically a at least 3-to-1 risk reward trade, all right? So let's do this. There's your stop loss, okay? There's your stop loss right there. You want to give yourself at least a 3-to-1 risk reward trade. Look at that. Very next day, murder your take profit. That's a 3-to-1. What if you had given yourself a 4-to-1 trade, right? You kidding me? Blasted right through that thing. This right here, this is 2,800 pips. Like, guys, this is 2,800 pips right here, okay? Let's look how far it went up. It actually gave you over 3,000 pips. Gold, right here, gold. Give you 3,000 pips off of this one entry in literally like barely any drawdown. Imagine if you had caught this trade with one standard lot. This would have been a $30,000 move in 48 hours. You kidding me? Like, this is how you become financially independent, by understanding these moves and understanding these setups, okay? But that is the whipsaw pattern, 2 truths and a lie. It showed you the truth, right? It showed you what the real move was first. It showed you that it was supposed to go up, but it showed you at the wrong time. You got to understand something. When your overall directional bias says that you are going up, when you see accumulation, like so, right? When you see these accumulation areas and you know that price is supposed to go up, when you see this expansion here, you should know that that's a lie, right? Because you know that the market makers will likely expand in the opposite direction first and then make the real move. So if you know that the real move is supposed to be up, but you see expansion up, you can actually expect price to whip down, right? And knock a bunch of people out, because a bunch of people get excited when they see these breakouts, right? All these breakout traders like, yeah, you know, when price breaks resistance, wait for it to retest resistance and then it's going to go to the moon. That happens like 1 out of every 8 or 9 times. So don't be a breakout trader. Understand the market maker pattern and understand their classic moves, right? Because literally all this was a whipsaw before it gave you 3 consecutive days of rise and then it corrected. Like it doesn't stop. It doesn't stop, guys. Peak formation, shoots up, 1 day of rise, 2 day of rise, 3 days of rise, and then it corrects. Like, it happens over and over and over again in the market. Let's show you on another pair. Let's look at Bitcoin USD, right? Check this out. Now, based off of your top-down analysis, you could have known, or you would have known, that Bitcoin USD was meant to go down, right? The DXY was going very bullish at this time. I remember this time frame. DXY was going very bullish. The dollar was going extremely strong, and I knew that that Bitcoin was coming back down, right? Now, here it is. You've got this accumulation. Notice how it starts in the beginning of the session, okay? Here we go. Asian range from 8 p.m., which is 8 o'clock, right? I'm sorry, 20 military time, right? All the way over, okay? And look what happened. It expands down, right? Now we know realistically speaking that we're supposed to be seeing a downward push. So everybody in their mama, once again, who saw this crazy shift candle here, everyone started hitting the sell button on Bitcoin. Everybody, right? People saw this crazy momentum candle. They said, oh my God, I gotta hop in for the buy. I gotta hit for the sell. I'm gonna jump in for the sell and it's gonna go down to the floor. Look what happened, right? It supposedly melts down for a second, but then here's the trap. Boom. You can tell right here, right? This right here is a hammer. Think about the anatomy and the psychology of this candlestick pattern right here, okay? This whole candle, my gold candles are my bearish candles. This whole bearish candle, it was all gold at one point, right? And a bunch of people, if they didn't hit the sell button here, they probably started hitting the sell button right here, right? A lot of people jump in on trades too late. They started hitting the sell button right here, and look what the market makers did. They pulled it away. Well, all the sellers are trapped here, right? They pull it away, and look what it does. It shoots up. It shoots up. So anybody who started selling here, they got knocked out. Stop losses got hit, right? But you see it clear as day. Here we go. See it clear as day. It whips down, pushes up, right? Gives everyone the idea that it's going to continue to rise up. But then you see what happens. It literally gave us a triple top, head and shoulders pattern, gave you a perfect entry trigger right here for the sell. Now, again, the real move was down. If you made the sell decision, you made the right decision, but you made it at the wrong time, because you should always be looking for the sell above the accumulation, never below, never, right? So here it is. It expands up. Expands down, then expands up. So here's the truth. Here's the lie. Get everybody to think that they should be selling. I mean, they should be buying Bitcoin. And then look what happens. It melts down. It melts and melts and melts and melts and melts. You kidding me? And realistically speaking, it's probably going to correct now. But look at that. Look at all that downward motion. That whole downtrend. Price is literally just melting. I mean, think about this, guys. Like, what if you had actually taken that entry, okay, on that picture perfect triple top, aka that head and shoulders? What if you had taken that entry and you shorted this market because you understood the market maker pattern? Here was your stop loss right here, right at the top of this trap move, okay? And let's see just how far this thing fell down. Man, this is a crazy, crazy, crazy thing. Look at this money. You kidding me, guys? Look at all of that. This is a 1 to 8 risk reward trade, like literally hundreds of thousands of pips, hundreds of thousands. I mean, it doesn't get any better than this, y'all. And all because you understood when you saw that area of accumulation, when you saw this false move, everybody who jumped in for the sell jumped in at the wrong time. They got cooked, they got beat up, and just like magic, you saw you saw the sell opportunity over top of the accumulation range. This is where you should have been looking to make your sell. If you made that entry and just rolled that trade down literally for like a week, you got paid 1, 2, 3, 4, 5, 6, 7, 8 days of price just melting down. I mean, look at that right there. 386,339 picks. You kidding me? That's crazy. So this just lets you know just how powerful these trade opportunities are, because I'm telling you, when you understand these whipsaw patterns, man, these whipsaw patterns pay out so much money. You just have to have a really good understanding of the directional bias based off of the larger time frame, okay? So whenever you see an accumulation range and you see it expanding to the south, when you know based off of your overall directional bias, market structure, right? You know that when you see accumulation and expansion to the south, when you should be looking for sells anyway, you're probably loading up for a whipsaw. You're probably loading up for a whipsaw. And when you take advantage of that, you can ride the move down. It's going to give you crazy, crazy, crazy money, okay? So I hope this helps, guys. Always come out to your larger time frames and see if you can recognize big picture patterns. Let's look at gold really quickly, right? Let's go to the weekly time frame. How would we have known to look for those buy opportunities? I mean, look at it. Here it is, as clear as day, right? So we've got our 3 levels of drop here. 1, 2, 3 levels of drop, our peak low formation, right? Which should now be followed by a level of rise, a pullback, and another level of rise. So based off of this larger time frame, you know that the bigger move is going to be buys on gold. That's the bigger move because of where we are in the pattern. Okay, here it is, plain as day. Accumulation, right? Accumulation, expansion, 1 level of drop, pullback, level of drop, pullback, level of drop, peak low formation. That's basically just a big old glorified W. You can't miss it, right? Now you're looking for rise, pullback, rise, pullback, rise. The market it does the same thing over and over and over again. So when you saw this downward push right here, don't get too crazy about this downward push, right? Because you know that this is just a correction to a Fibonacci extension. Let me prove it to you. Here we go. It's nothing more than a pullback from this swing low, this swing high. Look at that. Picture perfect to the 61.8, right? It's the golden zone, bounces. So I'm only looking for buy opportunities now so I can look to break this high point because the market is always doing the same thing over and over and over again, guys. So I hope this video truly helps you. If you want even more help, then look into becoming a legal con artist, look into joining our group, look into getting personally mentored by me or one of my coaches, because we absolutely want to help you see these setups on the charts. We absolutely want to make sure that you know when to make the right move at the right time, even if the market makers are showing you the right move at the wrong time, because every now and then they will give you two truths and a lie. And when you know what to look for, know when to look for, I guarantee you the payday is big. All right. Hope this helps, guys. Once again, this is yours truly, MJ Worth, more legalconartist.com. Look forward to see you on our next video. Take care. Be blessed. Peace.